Ticker symbol QQQY, or the NASDAQ 100 Enhanced Option Income ETF, is a defiance ETF that we talked about previously on the channel months back. We talked about the fact that this was the first ever put-right ETF that uses daily options in an attempt to farm a massive amount of distributions for investors, which as of right now the distribution rate is 71.41%, so it looks like they've been able to do so. But since some time has passed now, I think it's a good idea to go through this ETF once again, talk about exactly how it works for those newer investors watching this video, and also to look at the actual performance of this ETF over time, because even though this ETF has been trading down and to the right, I think some of the performance will shock you. So if you want to dive into the NASDAQ 100 Enhanced Option Income ETF with me and see how this ETF has actually performed, make sure to stick around, drop a like down below, and let's get right into it. Real quick, for those that haven't already, make sure to go to the first link in my description and grab my new dividend investing ebook, where I share exactly how I went from $0 invested to now earning over $6,000 on a monthly basis and over $1 million invested in the markets. Along with the ebook, you're also going to receive my custom dividend tracker, where you can track your dividend progress on an ongoing basis and reach your dividend investing goals. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. So just to go over some of the basics before we go over the numbers, and trust me, you are definitely going to want to stick around. For those that are newer to QQQY, it says the first put-right ETF using daily options to seek enhanced yield for investors, and it's paid monthly. It says QQQY aims to achieve consistent monthly yield distributions for investors coupled with equity market exposure to the NASDAQ 100. QQQY is actively managed and seeks enhanced income constructed of treasuries, the NASDAQ 100 index options, etc. It also says the strategy's objective is to generate outsized monthly distributions by selling option premium on a daily basis. The fund uses daily options to realize rapid time decay by selling in the money puts. It then says investment objective. The fund's primary investment objective is none other than to seek current income. The fund's secondary investment objective is to seek exposure to the performance of the NASDAQ 100 index, subject to a limit on potential investment gains. So it's pretty obvious, and it's also in the ETF's name. This ETF is trying to seek a massive amount of income for investors, which, like we said, as of right here so far, it looks like it's been able to do so. But with this type of strategy, a lot of times we see these ETFs trade down into the right and decay over time, which, spoiler alert, is exactly what's happened in this ETF also, but we'll go into that in a second. Some more facts about this ETF. The expense ratio is also an important factor. It's around an entire percent, so keep in mind this ETF is very expensive to hold on to, but most ETFs with this sort of active management is going to cost probably around the same. Now, this ETF has been trading since September of last year, so like I said a minute ago, we do have a bit more data to go off of and to see exactly how this ETF has really performed, which of course previous performance doesn't indicate future performance, but it gives us an idea of if or if not this ETF has even made investors money long term. Now, just before we go over the numbers, and I promise you guys you're going to want to see them, we have to talk about this right here. It says the NASDAQ Enhanced Option Income QQQY has announced a 1-for-3 reverse stock split. As a result of the reverse stock split, each share will be converted into the right to receive approximately 1/3 new shares of it. The reverse stock split will become effective before market open of August 1st. The treatment of fractional shares is unknown at this time, it says. So this came out on July 25th, basically announcing that there is going to be a reverse stock split. Now, say what you want, but reverse stock splits, at least for the most part, from what I've seen, are kind of more or less a negative thing. And it really normally only happens when you see a massive amount of decay happen with a stock or ETF, unless of course I'm missing something. But also I have to say that just because a stock splits or reverse splits, it basically doesn't change anything. You're either getting more shares of something that equals the same amount of money, or you're getting less shares of something that equals the same amount of money, whether of course it's splitting or reverse splitting. So it doesn't really change anything necessarily, but again, you normally see this during times when stocks or ETFs trade down into the right. Which, to be fair, that's basically exactly what QQQY has done since inception. This ETF, like we saw, came out in September of last year, and since then it was trading around $59 per share. Since then, month after month, this ETF has traded down into the right, although of course it's distributed massive amounts of distributions to investors, but still it's hard to look at that chart and to be excited about an investment, at least if you ask me. Now, I will say there's a caveat to this. A lot of income-focused investors are probably in my comments right now saying the fact that an enhanced income ETF trades down into the right, it means nothing. Total return means everything. You can't look at price performance and really judge an ETF that distributes a massive amount of distributions ongoingly. And honestly, they're kind of right about that, especially in the case of this ETF, because I'm going to show you here in a second. This ETF has actually made investors a lot of money, even after the price of it being down around 35%. Now, to be more specific, since September 14th of last year, which is around 0.88 years away, this ETF precisely has made investors a total return of around 14.94%, or an annualized gain of around 17%. Now, keep in mind, this is with dividends reinvested, so let's say you wanted to spend those massive distributions along the way. Well, then you would have only had a total return of around 11.5%, or an annualized gain of around 13.08%. So either way, no matter how you want to cut it, it honestly is much better when you look at the entire picture and actually see how much an investor would have actually made if they bought the fund during inception and actually accounted for all those massive dividends, those massive distributions. Because again, like we saw here, even if an ETF trades down into the right significantly, which this one definitely has done, it's down around 35%. Even with all that, if an ETF pays a massive amount of distributions to investors over time, the total return, which is price return plus dividends included, are going to be positive, which in the case of QQQY it is. Now, all that to say is that I still personally sort of have a problem seeing an asset in my portfolio continuously move down in price. Now, I know, again, income-focused investors are going to say, well, it doesn't move down in price consistently. You're supposed to take some of the distributions and reinvest it into more shares of it at a lower price to lower your cost basis along the way. So really, your portfolio isn't necessarily going to look as grim, of course, as if you were to just buy something like this, hold on to it, and then spend the distributions along the way. And although they have a good point, that is a strategy. I've heard about the strategy. Trust me, I've looked into it. I still, for the most part, like to invest into some higher yielders, even ultra high yielders that more or less trade at least sideways, maybe down a little bit over time, something like SVOL or even QQQY, ETFs that focus on income but aren't necessarily going to drop down as fast, like things that we saw out of QQQY. Now, that being said, the numbers are still the numbers, and investors that bought into this one, if you include the distributions, which of course you should, investors still ended up making money off this one, which is something very important to mention, of course, because a lot of investors like to rag on these sort of investments and really show the fact that they've decayed over time, NAV decay, you've heard the whole thing. But still, net, investors made money, at least over multiple different time frames, by investing into this, especially if they reinvested the dividends along the way. Now, for me personally, because the strategy, especially of these very short duration, option-focused, income-focused ETFs, I personally would always make this a relatively small portion of my overall portfolio. And that's just because for me personally, I have different goals long-term. I have a different strategy long-term for my portfolio. And something like this would never fit as a large position for what I'm looking for. But although for a small portion, more of a gamble position in my portfolio, I have a ton of fun buying things like the yield max ETFs, things like this that offer massive, ultra high yields. We're talking like 50+%, which is insane, because not only do I partially believe in the strategy, but again, depending on how the market trades within that given time frame, it could actually make you a lot of money like we saw off of something like this. But all in all, because I personally wouldn't really identify myself as a hardcore income-focused investor, I'm more of a dividend growth investor that likes to dabble in some income-oriented assets. I personally, like I said, would never invest into something in a large amount that's going to trade like this long-term, even if it offers a positive total return when it comes to distributions plus price return, or price decay in this case, included. Besides, on top of that, I'm really turned off also by the reverse stock split. Like I said, I know it doesn't really change anything whether a stock or an ETF splits a stock. It makes more shares, less shares. It doesn't really make too much of a difference, but I kind of have an idea. I kind of see what they're doing here. But now, more importantly, I want to hear from you guys down below when it comes to these ultra high yielders that might have decayed over time, but also offer massive distributions and give investors a green total return. I want to hear if you personally already own something like QQQY, or if you would or wouldn't in the future. Let us know in the comments down below. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.